What's up going on? Looks like I didn't have the music going in the beginning of things, but yeah, you know what it sounds like. All right. How am I coming through on Discord? Things doing okay? Let's see who we got on our YouTubes. Good. Got a thumbs up there. Thank you very much. Welcome to the stream, everyone. If you have symbols to look at, call them out! Exclamation point. Rocket emoji. All right. Music is now the sound of Friday. Yep. Oh, that's nice. Awesome to hear that. All right, let's see. Let's get our framing right so I can talk to y'all. Okay. Happy Friday, everybody. We have had yet another interesting week. I know I say that every week, but yeah, this was actually pretty interesting. The big things that are happening right now, if I look across my trading screen, crypto is really giving it up today. They are giving up a lot of those gains, and we're going to talk about that in just a minute once people start floating in. And let's see. Let me get my screen up here because you're not going to look at my face the whole time. Stocks are still at the key level that I've been watching. SPY, we'll use the SPY. It came back again today. There's the level here at, let's call it 429. And that is the key level. Let's get my big face down here for a second. I don't really have a fancy speech to give. We're just going to talk from the charts. Let me get this adjusted. One of these days I'm going to upgrade to OBS or something. There we go. Okay. Got the little baby Yoda in the background. Yeah. Okay. So we're looking at the SPY right now. This is the setup that I've been watching since, was it March the 1st was Tuesday. And we got our first pullback to this level right here. If you guys know and watch the things that I do, I really love my false breakouts and spikes. I really hope that this pattern right here plays out, because I'm going to get to say to everyone, hey, look at this indicator. This is really valuable above everything else. It's also going to be a textbook case for how these false breakouts set up. This is the bread and butter, the foundational principle that I try to trade on, is everyone thinking that price is going to go one way and only to have a snap back the other. As a contrarian, I love this because everyone, quote unquote, was getting in short on the 24th, which was Thursday of last week, only to have Friday rally it back up above that level. And then now this week, we see what's going on. It's pulled back to the entry level twice today. There was your second opportunity. If we look at the Nasdaq, it's doing pretty much the same thing. It's holding this key level right here. So let's call that 429 if we want to be specific on the SPY, 4,290 on the S&P futures, the ES. And that is the line in the sand I'm going to be watching for. I'm okay if it plays around in the 420 range, and but as long as it doesn't break last Thursday's low, I'm going to be bullish on the stock market. So as you guys are filtering in, welcome. If you got questions about symbols to look at, let me know. More than happy to look at it and give you my opinion. It's going to be my honest opinion. May not be what you want to hear, because I think a lot of people, I made a video this week, a lot of people have been asking about alt season. And just as a real quick, I found a good indicator this week. I put in that video that I did, alt season index. This is a interesting metric right here that tries to look at the Bitcoin market cap dominance and tell if we are in alt season or if we're in Bitcoin season. And I've been saying for every single weekly session and every live stream that we are still in Bitcoin season. And what informs that is the market cap dominance. I'm going to put on Ichimoku right here, and it is trending up. People are going into Bitcoin. It's the safe haven currency. I mean, you can see right now by looking at the crypto today, Bitcoin is down about 7%, Ethereum down 7.5%, Monero down a little bit less, Cardano a little less, Litecoin down some more, Solana about the same as Bitcoin. It's pretty mixed. It's just a sell-off, risk-off across the board. And the reason is volatility. The reason you get those crazy gains on the way up is volatility. All right, got some good symbols coming through. Affirm, Hood, and LDI. I have an opinion on one of those. Yeah, let's take a look at those. Let's take a look. Let me bring up my notes for today. What did I want to talk about? Yeah, I want to basically I'm going to talk about the. Oh, you got a whole list of things to look at. Okay, more than happy to. I'll look at yours first, and I'm going to look at some of mine for this week. I'm going to basically recap a lot of the trades from this week and see where they are. There's a lot of significant things happening when it comes to weekly and long-term pullbacks, because we've had a big bearish trend going on right now, and it's brought us down to the halfway point of a lot of these COVID pump related things. In other words, we had the COVID low back in March of 2020. We had the all-time high for pretty much everything was sometime in the fall of 2021. And now in the last few months, we've pulled back. I think it's opportunity. Who knows? We could be going into that crash that everyone's so afraid of, but I think it's opportunity. So let's take a look at your list. Achuka 1. Achuka 1. All right, let's take a look, man. Yeah, I can look at that too, Falco. All right. AFRM. Affirm. This has been talked about, I think, on Discord a few times. I don't have a position in it myself, but let me give you an analysis. So this looks like it had an IPO in January of last year, and it is a falling knife. See, I've come up with this new phrase. All right. The new phrase is basically the uncanny valley of risk. Here's what I mean by that. So if I do everything on 50% retracement levels. Comes from Ichimoku. But I look for 50% retracement levels to major trends. So if I'm looking at a firm right here, May the 10th, my birthday, 2021, on the weekly, up to the all-time high that it made, around a 111, it got to the 50% of that move. Let's go back to that point and just talk about it. Okay. So here, you notice how price actually made some respect of that level. I like it. I like it at that level. I would not mind going long a firm at this level right here, because you have some confluence right here, and it spiked a little below it, but it basically just held what looks like a pre-earnings gap, and that can happen a lot. That's a good support that it held, and so this would have been a good trade to have taken it long here. You're playing a retest to the high, and then there's your 3-to-1. You never got stopped out. That's a trade that I like. I try to play these as much as I can. There's one that I took this week, PPG. Let me make a note of that. That's in my notes. We'll take a look at that one too. That's one of these pullbacks to a COVID low. And so once you get to this point, I'm okay with someone being long. but you need to be very defined on your risk. I hate bag holding. I don't want to have bag hold. It sucks because you end up getting into this period that I call the uncanny valley of risk. Now it comes back to the risk point, pulls back to that level, and then when did we actually break it? Because I know the future because we have the benefit of that. And there. Okay, so we stop out at about 91.76 on this. That sucks. I don't like taking losses more than anybody else. But see, the problem is if we don't accept that loss, and that actually here's a little bonus. If you take the little earnings low right here, you even have that daily bar close below it on January the 4th this year. So, wow, when the market was up at its last all-time high, this stock was breaking supports. That's a danger sign. That is very, very dangerous. But if you like the company, if you're a long-term investor and you don't want to take the loss, you start to come into this area that I call the uncanny valley of risk. And that can be anywhere from here, basically down to the lows. And so this is the uncanny valley of risk. That's just my word for it. You're not going to find it on Google or anything like that. This is what I'm trying to teach people. You want to stay out of that valley, okay? Because in the uncanny valley of risk, you're not making good decisions. There's no way that you can find out where this thing's going to turn. So many people are asking me about everything, Facebook, everything that's down, Ethereum, where's this thing going to turn? I don't know. It could turn at these highs right here. It could turn around at this little inflection point right here, or it could turn around at the low. You just don't know because you're in the valley. And if you hang on to it, you're going to be sitting there at each of these little supports, hoping that it comes back. There, you got a little bit of hope, Okay, maybe it's going to turn around. But even if you're down, oh, now you broke it. You're down more than 50% from your stop. Geez. So, you know what? I'm not a fundamental investor. This week, when I bought Waste Management, Manaconda, he purchased WCN, I think it is. It's another waste management company. He found that stock because it was a typo. He was looking for Accenture, ACN, and he bought it because he liked the pattern. Like, I don't know what a firm does. Maybe you do, but it doesn't help you what they do if you're down 50% of your capital. That's 50% less money you had to put into something that could be going up. So, like I said, I mean, look, these IPOs, they are high risk plays for a reason because you want to make these big gains. These aren't Coca-Cola. These are not, what's another one? GE, which really came down a lot since the 70s. These are not Google. These are not Apple. These are not well-established companies with 10, 20, 30, 40 years of track record of good, steady growth. These are speculative plays. You can't just like what they do and go for it. I have a lot of friends now as I'm getting, into my more adult years that have had businesses that were great ideas. I had a friend of mine that he had this startup tech company where he was going to do, instead of TikToks where you're dancing on videos, he had this great idea that he was going to do sound sharing. People could record an audio clip and then share it and it could go viral. Not quite the same, but it makes sense. Well, he got it programmed, he got it launched, he was very secretive about it. And then for something happened where the funding dried up and the company's no more. It sounded like a great idea to me. But someone obviously put millions of dollars into it and it just went nowhere. Business is about taking risk and failures. And just because you like the idea doesn't mean that it's going to work out. So this is painful because, the question people ask is how much lower can something go? Well, this week Was it a buddy of mine last year? He got me into a company, C-pop. This is kind of, it was funny because I got into it on his recommendation back in, what was it? I like this setup back in the summer of 21. Where is it? No. It was in this little leg up right here. And I think, yeah, okay. So I think that in the pre-market, it's set up for a profit target around 5, but I wasn't able to get out at that point. And so I only put a small position here just to sit in one of my accounts to remind me why you don't ever say a stock can't go lower. This is a unique case. This is a penny stock going to zero, basically, but you never know. Just because something's trading at $30, $40. Yeah. Let's look at some of your others. Let's not just let's not take a look at this. Hood, Robinhood. So I am not a fan of Robinhood because I'm a trader. Real traders need tools to trade. Robinhood is a app. It is a video game that you play on your phone that lets you actually trade real money. The tools that I need for charting, for looking at implied volatility, for charting implied volatility, for coming up with retracement levels and looking for false breakouts, none of that's on Robinhood. The only reason I have a Robinhood account is because all the kids were doing it 2 years ago. And I started one up doing as I do normally, and it's doing very well because I started in 2020, like anything should. But that's the only reason I had it, was just to throw in my stimulus check and then show people how much it can be grown. I don't use it for anything except just that. What I use normally is Tastyworks for options, typically Thinkorswim, and then TradingView for charting. And I have no use for Robinhood. So as far as the company goes, I think it has a horrible product. I don't believe in it. That being said, on a technical level, you'll see I already have it on the chart right here, that if someone wanted to try to buy it at 1265, I wouldn't be mad at them. The reason is this. You see where price stopped here after earnings and then where it also stopped here on the 24th? 10. Now, that's not just because it's a nice round number. It's not because it's the number 10. When a stock goes below 10, it becomes a penny stock. That makes it falls into a whole different classification. It means that it's ineligible for being listed on certain indexes. It's ineligible for certain funds to have it in their portfolio. It won't be in certain mutual funds. Investment companies, retirement accounts, pension funds can't have a penny stock. They just can't. It's not allowed. And so that is the last line in the sand for a stock to hold before it becomes absolute crap. And that's where also you see Palantir is really flirting around that 10 level right there. But all that being said, if you notice, I've got it drawn up here. What I like to look for is on these kind of reactions, a 50% retracement. It got it there at 1265, but you have to have your stop down below 10. And probably when it hits that below 10, it's going to go hard, give some slippage. But at that point, yeah, I don't know where your buy-in is on this. Maybe you're down, 90% and it doesn't matter. Yeah, look, I know Robinhood was very popular, but that doesn't mean it's a good company. One of the reasons they're losing so bad is because of all the bad publicity they got. And Robinhood active users. I brought this chart up before. In their last earnings, they basically showed how they have declining. That's for quarter 3. Where's quarter 4? So they were growing through quarter 2 when everyone was making money in 2021, but by the quarter, and then the recent one, I can't really see. Oh, here we go. Yeah, their users are actually declining because they've run out of money. So that's why it's going down. And honestly, I just don't think they have a product that is competitive with whatever's out there. I mean, they have an app. They have a bunch of young people with $1,000, $2,000 accounts, but they're not really attracting people like me that are long-term traders or people that have very large accounts, nor do those people trade very often anyway. Okay, that's all I'm going to say about Robinhood. Holding a lot of bags. I'm sorry, man. Stop doing that. Uh, gross. I mean, this is an example. Let's see. Where's that 10? Yeah. So when this thing became a penny stock, notice how it broke below earnings into penny stock territory, came back up to 10 and never looked back. It basically, here's a good example of gap fill, and okay, so this is here. Let's take this as a teachable moment. Let's say that you have something like this happen where you have a gap and it pulls back to the lower side of the underside of the gap right here. That's a good opportunity for just a short if you're trading. But once it holds that on this bar, and this bar, you need to quit having hope, because 850, you're like, oh, well, how much lower can it go? Well, the answer to your question is from 850, 50% more, down to 4. Yikes. Let's take a look at another one. I'm pretty sure these are all going to be the same, aren't they? And then SPLK. I'll show you some good trades here in a second. Things you need to be looking for. SPL Spelunk. Well, you're holding support. Don't let it get below 100. That's what I would say on that. Okay. Let's see. Spotify. Let's look at Spotify. I mean, Spotify has been a teachable moment I've used for teaching about false breakouts in my videos I've been doing, where when Spotify did this little maneuver in February of 2021, this is your learning experience here. You have the high that it made on January 13th, 2021, and then you have this high that broke below it and then fell off. That was your sign. I know that doesn't help you now, but in the future, when you see something like that, you need to pay attention. I like how it also came down here and held the 50% of this move down. Again, when you had this opportunity here at this high post IPO, let's go to the weekly, where it came to here, and then you had this potential support. It even came back to, it broke below it, came back to retest it. Earnings tanked it down. You're in that uncanny valley of risk. You don't know where this thing's going to reverse. Yeah. So I don't know what to tell you about these. Let's look at some winners. So if you have questions, just make sure, hey, what's up, Beach Bum Trading? Yeah, Melbourne Beach, Florida. Might have to come visit here pretty soon. Dollar Tree. All right. Let's look at Dollar Tree, then we'll look at TF. I'll finish. Get your symbols in right now so that I can talk about things. Let me check the thing. Can you talk about market seasonality? Yes, Thomas. Yeah, or Tamalama. Okay, yeah. Dollar Tree. I like it. It's coming up to a high. That's actually, let's talk about Dollar Tree in the scope of sector rotation here in a second. All right, let's talk about that. I'm making a note for you because that's actually going to be a topic I want to touch on pretty good. So hold on, let me go take a peek at TF on the TSX. Is TSX, is that the Canadian stock market? Timber Creek Financial. Well, is this what we're looking at? TF? Is that what we want to look at? Embrace. If I have to guess, I'd say that this is a financial services company, and financial services have been taking a little bit of a hit because they think the market, that they may not raise interest rates. Okay. So this being a financial company, it looks very boring. I'm going to take a guess that TF. Are you trying to sell me on TF? I'm going to bet that this pays a dividend. That's Truist. That's no. Okay, TSX, TF. Oh, TF, TSX. What's the nomenclature? Okay. What's the dividend yield on that? I feel like on this one right here, you're not really. It's recovering. Looks like from COVID, and it's more just of a dividend play. Hold on. So I can figure this out. 6 cents. So that's 24 cents per year. 2.5% dividend yield. It's not bad. It's not bad. Technically speaking, it looks like this is just a dividend play because it doesn't really move very much except when it gets a financial shock. Yeah, 7.5%. Oh, that's very high. So 7.5% puts me in the realm of concern, believe it or not, because you're getting paid to take risk. And there's been a few good dividend plays like in ExxonMobil, which is paying off, and wow, it's up more today. And Philip Morris, these are two dividends over 6% that I actually have. I think you just kind of hold it and reinvest, and you accept the fact that with that high of a dividend yield, you're taking on a little bit more risk of the stock going down. I mean, that's just the play. I mean, if you want a safe company with a very, that's not likely to crash, you go with Coca-Cola, which is paying you a, 2.82% dividend yield. I mean, any stock can go down, but that's a safer bet. And it's going up now because consumer staples are, which we're going to talk about in just a second. Let's see here. Okay. Let's jump into that market seasonality for Tom Alama. So market seasonality. Okay, let's talk about specifically what you're asking about. Market seasonality is a study of looking at all these years going back and then overlaying a seasonal pattern to it. In other words, like you're saying, that each month may have a different season. Like it may go down a certain percent. There's let's see, hold on. Where is it? Seasonal. Hold on. Let me look something up real quick. Give me a minute here. Let's see if he still has this website. There used to be a website that did this seasonality. Nope. No longer existing. So there are some in Thinkorswim, which I don't have up right now. They have a seasonal chart that that you can bring up, and it will show you. It will overlay the different years and give you the ability to look at seasonality. I'll tell you what. One second. Let me bring that up. Actually, you picked the one time that I did not have my Thinkorswim up. Give me a second. I'll bring that up, and we'll look at that. Oh, I didn't want to put that up there. All right. Okay. So this kind of thing come up. So let's talk about Dollar Tree while that's loading up. So Dollar Tree is very much benefiting from this rotation that we're seeing, this sector rotation. There is a distinct trend going on right now, and I'm going to make a video about this weekend with the different sectors of the market. Energy has been a huge leader. Consumer staples, things that people buy, that keep buying no matter if it's a recession or not, are going up. Healthcare, things that people can't really postpone, they have to buy anyway, are going up. And utilities, bills that people have to pay no matter what, are going up. These are These three are defensive, is what they're considered. Because if the market is going to go down, if the economy is going to go down, if we're going to go into a recession, these should hold their value. That's the theory. And if you look at the sector rotation model, as it were, let's bring it up right here. What we're looking at is when energy leads, it suggests a market top. Now, I'm not saying that we are at a market top, but as the market begins to roll over, the things that begin to lead are consumer staples, healthcare, and utilities, these safer plays. And so, if we're just looking at the sector rotation model, that is what it suggests, that we are at a market top or have been. Energy leading, now the market is starting to rotate into more defensive plays. Dollar Tree has benefited from this. Waste management, which is my trade from this week. This is what you want to see in a trade. Come down to a 50% level. This is a daily chart of waste management. Pick this one up on both the 50% retracement from the February low up to the all-time high. Why is a garbage company going up so much? Well, because people need to have their garbage taken out no matter what. I don't know why, but this has been a good play. Philip Morris, which is another consumer staple. People still smoke cigarettes. Procter & Gamble, people still buy toothpaste. It's not doing quite so well. What are some others that are consumer staples? Well, we'll just look at the XLP. Consumer staples is XLP, and it's holding its ground while XLE, energy, going crazy. But then XLK, which is the tech sector, which was the winner, is falling off relative to the rest of the market. And so that is the rotation that we're seeing. And so if you're benefiting from Dollar Tree, I think that's a pretty good stock to be in right now because of the way that we're going risk off. The market is wanting to take less risk on speculative plays like tech, IPOs, startup companies, etc. That's the phenomenon that you're seeing. People are going more towards value. And I know it's a little late, but if you're looking for a place to hide right now, that's where to go. It seems to be. So let's check the comments there. Hey, what's up? Hey, you're welcome. Let's see. Commodities are up. Yeah, commodities are definitely up. Goodness gracious. Wheat. That's kind of an obvious play, isn't it? Because of the amount of wheat. And corn. What's corn? Corn fund. Yeah. All this is up because of Russia. Also inflation. So these were definitely the plays. I gotta admit, I'm not in them because that didn't really that didn't clue me in. By the way, if you did get into them, why aren't you on Discord? Why aren't you on my social media talking about these things? There were two plays this week that members of my social media called out. PPG was one of them. This is pulling back to, again, a 50% retracement level. I don't mind taking a play on this. I like it. I like it when somebody called out to me. And then silver is another one that is playing out as well. And so far, it's looking pretty good. I like it where silver got to this 50% retracement level, broke above it, pulled back to it, got into it yesterday, and it's off to the races. So, and those two, PPG and silver, are coming from members of Discord. I can't look at every single chart. That's why I want to invite people to my Discord. Is not because I'm going to charge a fee. I don't charge anything for it. Just because I want to have a community of traders around me to get ideas and share ideas. So, thanks to the people that put that in there. And if you saw the wheat and the corn trades ahead of time, and you didn't give me a little knock and say, "Hey, Norak, I think this might be opportunity," come talk to me. I like to talk to you guys. So let's see, what else do we want to talk about this week? Let's go back to crypto. Let's look at the crypto trades for this week. So I finally was able to take some profit on ETH BTC. So one thing I've been talking about in my videos to people that are very concerned about their cryptocurrencies, their favorite cryptocurrencies going down, is you need to be looking for hedging opportunities. I don't know what exchange you're on. If you're on Coinbase, my question would be why? Why would you stay on Coinbase when there's all kinds of other better exchanges out there? I was at a meetup earlier this or a week or two ago, and someone was saying like, "Oh, how can you trade on it's just so expensive to trade, cryptocurrencies." And I was like, "Well, what exchange are you on?" It's like, "Well, I'm on Coinbase. They charge like 1% or 2%." Dude, what are you doing? Like, if you trade on like I can recommend these things: Bitfinex, FTX, maybe even Kraken if you need to get your fiat dollars into the market. There, you should not pay more than a 0.25% commission on trades. Coinbase, again, another how much lower can it go IPO? I can't wait until this goes in the ground, honestly. But the point of that is, if you're in cryptocurrency and you're trading it, get on an exchange where you have access to margin for shorting, or being able to get into some of these cross pairs like Ethereum, Bitcoin, Monero, Bitcoin, Solana, Bitcoin, whatever the cross. Because as I was showing on the Bitcoin dominance chart, as the crypto market gets more and more nervous, people start going to Bitcoin. It's the safe haven asset. Give me just a second here. I actually did the math to illustrate this for a video just yesterday, in case you missed it. 1 second. Did a little quick spreadsheet to show me these are the movements. This is from yesterday's prices. It's probably down even more now. But these are the movements on 10 of the major by market cap or by hype in the case of Doge and Shiba from the November high down to yesterday. And Bitcoin has decreased the least. Still gone down, but it's decreased the least. This is the fat tail other side of risk when it comes to trading. You want those outsized gains. You want those YOLO gains from pairs like, I don't know, Solano and things like that. Because when it was going well, when things were going well on things like this, like from let's say July, the summer of 2021, Solana was up 1,000% up to the high in November, whereas Bitcoin in the summer, from the summer lows here, was up only 130%. So, ooh, yeah, can't do much with 130%, can you? But then again, from the high, Solana is down 63% instead of 38%. That is the other side of the volatility that you get on the leg up. It goes down more. And you notice here on Solana, just real quick, where we broke below this 50% retracement I have marked up right here, and we're now in that uncanny valley of risk. I did an analysis for someone today where I saw that there was a potential spike right here. Solana really better not break this 80 level. It had better not break this, or else it's going to come back even further. It's another one of those situations of how much lower can it go? Well, you're at 86, and there's no reason why it can't cut itself in half again. I don't want this to happen to my friends, but again, you didn't get out when this thing didn't hold its halfway point. Now you're in the uncanny valley of risk. So, but the point there is I posted this trade. Oh, when was this? This was back in February, the beginning of February. It's an opportunity where if you have Ethereum and you don't want to sell your Ethereum, you look for an opportunity in a cross pair like this, Ethereum, Bitcoin. You take a short, you be patient, and then the movement down, this is, what is this, a movement of about 10%. You can either take it as a trade or you can take it as a hedge. Basically, short the Ethereum Bitcoin cross with the amount of Ethereum that you have, and now you basically locked it in versus Bitcoin. You're able to, instead of taking this drawdown on Ethereum, because from February the 4th, Ethereum is down. Where's February 4th? February 4th, where are we? We're about right here. I'll give it that much. It's down about 8%. So if you had put on this trade equal to your Ethereum, your Ethereum would be down about 8% from that point, but your trade on ETH BTC would be up because you shorted about 9%. And you basically would have locked in those gains, never had to sell your Ethereum, and you would have actually made a bit of a premium on that hedge. And so that's what I've been trying to encourage people to do. Now, I know that's a lot, just throw it at you guys. I mean, that's kind of like a class that I need to teach. So if you have questions, ask on Discord, Just Chatting, TradingView, and YouTube. If you have questions about that. Otherwise, I'm going to talk about some more crypto trades from this week. Or do I need to just start yelling about Shiba and how it's going to go to the moon? Because that seems to be what really gets the feedback and the attention in the financial media space. I'll admit to you guys, because you guys are probably my close friends now that are watching. I get so frustrated with how many views and clicks that these YouTubers and people get from talking about meme coins and costing people money. That's what it does. I'm short Shiba, by the way, and I keep making posts about it and getting a lot of hate from people about why and how, but it's still going good for me. I'm sorry that people have their hopes and dreams pinned on it, but this is not good financial advice and literacy to be in these coins, and you're basically in pump and dumps. This is the 80s pump and dumps again. It's just on a broader scale with a lot better, funny memes. I'm trying to help people with some actual actionable advice, and yeah, it's frustrating. It gets a little frustrating at times, but I'm going to keep doing what I do. So, all right. So Litecoin, this was a setup. Let's go through this one right here. And did I post the Litecoin? Yep. Posted the Litecoin. All right. So here's the Litecoin setup for this week. Again, I look at 50% retracements to hold for pullbacks, but when they break, that's significant to me. And so what I was looking for on this one, I got a spike alert that was at the 50% retracement at about 108.82 on Litecoin. So what that does, I know that this should hold to go up. Okay, that's what a spike is to me. Price spikes down, hits a support, and at this point, it should fly back up. If it doesn't, then hypothetically, I would be stopped out, just as everyone else probably is. And so that is what informs a breakout trade to get back down to this level. Now, it wasn't very quick. It actually came up, almost stopped out. But there's the breakout as it happened this week. I didn't know that Russia was going to bomb a nuclear plant, but I did have this out there in the market to catch this breakout. And as you see, price held that support until it didn't. And once it gave it up, down it went. That was a breakout trade. And so not only do I look at the 50% retracements for, let's go back to that Solana. Not only is it good to look at for a long, like here's that Solana. Think about it this way. If this does not hold, then that ends up being a good potential long. That's where your stop needs to be if you're long Solana, or if you're short, that's what sets up a breakout at that level. And it's just as simple as looking for the 50% of a major low to a major high and bringing it back up there. Again, with Solana here, I can pretty much bet that a lot of people are going to have stops. They're going to get very aggravated. And if we break this low that we made on February the 24th on Solana, that's a breakout. So Ethereum, I was not in Ethereum, but Bitcoin, I definitely had a very high conviction trade. I still have a high conviction short on it. What it did was something very interesting. It spiked out on March the 2nd here on the 1 hour. Basically, you had this resistance that was forming. They tried to buy it up. They failed it, smacked it back down, take a short, and this was the trade for this week on Bitcoin. And in the broader scope of things, and I'm going to recache all this in my weekly levels video I do every Sunday night. I can clean this up because I've already talked about it. What we're doing on Bitcoin is, let's bring up Ichimoku because that helps. Price has pulled back from the COVID low to the all-time high. Remember that, COVID low to all-time high. That's the one point I want to kind of end this on. We've pulled back to, let's say, the 36,000 level on Bitcoin, and that is where it has held. It's also the bottom of the Ichimoku cloud, but that's because Ichimoku is based on 50%. It's now being held to the upside. Bitcoin is being caught right now in a range. Now, I am willing to say that if we now can break into the 46, if we can get 46, 47K, that's also going to get momentum clear of the cloud, and we can actually get into the bullish territory of Bitcoin. In fact, if it holds here, that would be a really good bounce. That being said, if we break below the support, remember the things I've been talking about in the last couple of things, the Litecoin trade. Litecoin trade was at support. It should hold it, but if it doesn't, if Bitcoin breaks 32,000, I've been saying this since November, is probably going to go to 17K. It's probably going to get cut in half. Again, going back to, and this has been kind of we have a lot of themes this live stream, haven't we? Once you say how much lower can it go, well, the answer is probably about 50% lower than it is when you say that. But that hasn't happened yet. I'm not trying to scare anybody. I'm just telling you the reason I say 17K is because Bitcoin in its life, in its bear markets, it's had 4 separate instances of minus 75 to minus 85% from the all-time high. And a 75% drop from the all-time high puts you at 17K. An 85% takes you all the way back to about 9K. And I'm not saying it's going to be quick, because the crypto winters, the bear markets of crypto, they can last 2 to 3 years. You basically need everyone that had high hopes and ambitions, but very little education, dreaming of being crypto millionaires, to be washed out. I'm sorry to say that, but you don't get to make money at 65K or 69K when everyone agrees that Bitcoin's the future of money. It's a human psychology going back as old as time. What is the difference between Bitcoin and tulips? Well, a lot of differences, people would say. How dare you make that comparison? But at the end of the day, what is price? What is the price of anything? It's what people are willing to pay at that moment for that asset. And that's all based on feels, fear, greed, hope, all that stuff. And Bitcoin is no different, and it has never been any different. But it's still holding 36K. So I think people are okay. In fact, I really have been saying for a long time that this is possibly a head and shoulders pattern, and it could possibly get up into right here. But at that point, it will reverse. That's just my speculation. That's me. Ooh, my crystal ball. But all bets are off. But the first thing we have to do to get at that point is you got to get up in here in the 46s. That's the roadmap that I have for that. So, yeah, thanks for stopping by, Adios. All right, what else did I want to talk about? Let's see. So waste management was the trade of the week because we picked it up on that Friday. Oh, Google. Google is another one. Now, Google did something very cool today. Google pulled back. It had this rally off the low. I picked up more Google on Thursday. Thursday was kind of crazy. Thursday last week, not this Thursday, but Thursday week. I really didn't know how much lower the market was going to go, but I had to ask myself, what are stocks that I have the highest conviction on for the year? Google was the first thing that came to mind. It's at a major low, which is also at a 50% retracement as well, double bottom. And it also has that stock split coming up this summer, which typically in other stocks of the last couple of years has led to this rally, this FOMO rally. And it's all the way out in July, June or July, one of the J's. And so that means that this rally could form not this month, not next month. It could be May or even June right before it. And so that's what I'm trying to get into and play. It's also a company that I'm always going to buy their stuff. They're always going to know what things I like to search for. They're not going away. It's a company I've had for over a decade and I want more of it. It's the most obvious trade to me, but that's just my opinion. So let's see. What else? Long dated options. Now, this is we're going to talk about seasonality. All right, let's do that. Hold on. Let's have fun with Thinkorswim. Again, going back to the whole Robinhood thing, I think a gentleman left that wanted to talk about Robinhood, but you can't do this stuff in Robinhood. Like, you need a real trading platform, and there's all kinds of stuff. There's Sierra Chart, there's Ninja Trader, there's all kinds of things that you can do all kinds of cool stuff in, but you can't do any cool stuff at all in Robinhood. I'm surprised they even let you look at the Greeks. Okay, so on Thinkorswim, one thing you can do is you can go to style right here on a chart, and you can change it from standard, which is going to be your candlesticks or lines, to monkey bars. What are monkey bars? Monkey bars are that point of control stuff that people have been really into, by the way. This is their version of the point of control where they show the volume based on where things have moved to, but that's outside the scope of today. Or seasonality. All right, so seasonality on Thinkorswim is this. And let me see where we go to change this. There's a way that you can adjust this. Once you've changed to it, let's see, appearance, equities. There is a, let's see, general. Give me a second to find it. There is a way I remember that you can see the different months overlaid, but this is your seasonality right here on the daily. And so this kind of, here we go. So this is the current overlay of price, and then this is seasonality. Hold on. There's a way that you can set up. Give me a second. Somewhere in here, there's a way that you can change the seasonality to be a certain number of years. I've done it before. Hold on. So, style, seasonality. No, hold on. This is probably grabbing 10 years worth of seasonality. Hold on, let's see. And what it's doing is it's aggregating it into a line that will give you kind of the idea of things. It's kind of interesting to see that the seasonality of the market is that it tends to bottom at the end of March and then rises for the rest of the year. And wait a minute, hold on. That seems very weighted to a particular recent event, doesn't it? Yes. This is where seasonality kind of becomes a little bit of maybe questionably useful, because you have that COVID low, which basically this just looks like the 2020 market. And so what they've probably done is they've averaged in the last year and then 2020. And so you see a very overweighted to COVID time on Thinkorswim. Well, I tell you what, I'll try to dig into this a little bit more. Why don't you send me a message on Discord and we'll talk about this in one of the channels, because I think it can be pretty cool. I don't remember exactly how you manipulate this, but yeah, seasonality is a thing that people use. It's not something I use myself intimately, but yeah. So, all right, let's jump back to Google. let's see, put Amazon on your shopping list, but way overvalued right now. Well, you know what? Amazon is not going away. So, yeah, Amazon is not going away. I think that it's a good company to hold. All right, Google, basically what I was saying, came to this low, and then today, boom, pulled back to a 50% retracement, 26.14. I like that. I like that hold. I like the way the things are holding. Let's take a look at Apple real quick as we're kind of wrapping up things. Apple, which kind of dominates the market, it is just like the SPY, came back to the line in the sand it need to hold. I like it. I like it a lot. What else? Facebook holding 200. That's another how much lower can it go? Tesla hasn't recaptured its 50%. So that's what's going on with there. Anything else you guys want me to look at before we wrap things up? I'm a little hungry. Thank you guys for joining me this Friday and taking your time. Make sure that you do the like, share, subscribe thing, and come talk to me on Discord. I like to have these kind of conversations and have ideas like we were talking about. I miss the wheat, I miss the corn, because nobody thought to mention, hey, Russia produces a lot of these agricultural commodities, and we're in an inflationary environment, and commodities have been on a bullish trend. It's kind of one of those obvious things. So, all right. Thanks everybody for joining. Have a good weekend. Trade wisely.